to be in an institution that's actually older than I am, because
Yes.
there are not many of those around now.
Yes, yes, we're quite proud of our heritage. Now, today, we're going to move beyond the headlines. There's been a lot of talk about Hurricane Melissa. It's on the news every day. I want to begin by framing from an economic landscape perspective, definitely from a macroeconomic standpoint. What is the immediate and short-term impact that this hurricane has caused? What is the impact on our GDP, inflation? You know all the different metrics. What is our economy looking like now?
Okay, so that's a great place to start, because amidst the chaos and destruction that you see all around you, it's important to just sort what has happened into some buckets. And there are three, if you want to understand the economic consequences, there are three places to start. One is that there has been a destruction of the capital stock, the homes, the buildings, the productive capacity. You know, even land has been destroyed in the sense that the ability to grow crops. So one part is the destruction of the capital stock. A second part is because the capital stock has been devastated, then the ability to produce
Has been impacted.
has been impacted. And so it's not only about restoring the capital stock on its own, you know, the production of goods and services in the western part of the island doesn't exist anymore to a large extent. And to the extent that those are inputs and interfaces with the rest of the economy, then that interferes with the rest of the economy's ability to continue producing goods and services. That's the second element. The third element is that people are poorer. Your personal wealth is defined by your ownership of those same elements of the capital stock.
Yeah, and
So
in
to
a
the
lot of cases that has
so
been
the
eliminated.
extent that your business has been devastated, that your home has been destroyed or damaged in some way, if you have a vehicle, that would have been might have been impacted as well. And so people now feel poorer. So if we are going to work out what are the impacts on the economy, we just look at what is the consequence of a lower capital stock, of a disruption of production, and people feeling poorer.
Yeah, definitely. And as a result of that, a lot of persons might be hearing the name GDP going around. And we would have heard our Prime Minister noted that the impact could be somewhere around 30% of GDP. That is pretty much...
Conservatively.
It is conservative. Yes. And if you have such an impact on your GDP, what are the trickling effects? Okay,
so GDP, which is just a measure of our total production, usually done annually. That's the value created in the economy. That's going to be impacted because of two of the starting points that we just discussed. The capacity to produce has been impacted because the factories and the shops have been destroyed. But also, you know, when you feel poorer, then you don't go out and do unnecessary consumption. Correct. You know, you don't go to the movies, you don't go to parties, because you feel poorer now. That affects your willingness to consume. So it's your ability to consume because your income is lower. Production equals income, you know. So lower production means people just have less income, which is kind of obvious if you just drive through the western part of Jamaica. But even if your income is not affected, because you have lost wealth, your willingness to consume has been affected. So that is going to usher in a period of lower production and lower incomes for some time. Now, I can't tell you whether it's 1 year or 2 years or 3 years, but this is in terms of the share of the economy, it's a large impact, and it's going to take a while for that productive capacity to be restored and rebuilt, and for people to feel that they have the level of wealth and security, economic security, to start spending again.
Yeah. So just to step back a bit, Dr. King, prior to Hurricane Melissa, inflation was topical for us, and we would have achieved the BOJ targeted range. What does inflation could look like now given Melissa?
Okay, so a bit of context. Most people don't appreciate the importance of low inflation. Most people, understandably, think of inflation simply as the effect of rising prices on my ability to consume because I'm losing purchasing power.
Right.
And indeed, this will surprise everybody, and it's something that I love to talk about in the economics class I used to teach to one of the persons in the studio, that, if you look at it over the long term, wages and salaries generally keep up with inflation. So that is not even the impact.
Yeah.
The real destructive power of inflation is that it creates uncertainty in the economy. It's hard to be efficient if, when you go to the supermarket, you see that, flour, the price of flour has gone up by 5%, and you don't know if it's because this shop is inefficient and you shouldn't buy it, or you should go and search for flour at the regular price, or if it's just general inflation. And the problem is consumers and businesses see every price increase as general inflation and don't try to seek out the lowest prices. And it also interferes with a company's ability to invest, because it doesn't know how much its wage bill is going to be in 2, 3, 4, 5, 10 years' time. So one of the great achievements of Jamaican economic management over the last 10 years has been the reduction to low, predictable, stable inflation.
Right.
Something that
Predictable
has not
key.
happened in the 50 years before that.
Yeah.
So the question you ask about what's going to happen to inflation is important in that context. It's difficult to say, but because the productive capacity has been so disrupted by the hurricane, then there is likely to be greater demand for goods and services than the economy's capacity to produce. So that's going to put pressure on prices. As you know, when there is a situation where there is a shortage of goods and services, prices tend to go up.
Right.
This is why people came out with concerns about, price gouging. So it's going to put pressure on inflation, and that is probably the reason why this week the Bank of Jamaica announced that it is holding its
Interest
benchmark
rate.
interest rate where it is, rather than reducing it.
Yeah.
You would think with inflation so low, with inflation now around 3%, below their target range, that they would reduce interest rates and allow inflation to go back up to the target range. But they are concerned, quite rightly, about the inflationary impact of the hurricane. So they are trying to manage that by keeping interest rates where they are. So there is going to be pressure on inflation. Whether to the extent to which the maintained higher level of interest rates in the economy is going to mitigate that is something that can't be said with certainty.
Yeah, completely understood. And the other thing that we have to look at is with pretty much the entire agriculture sector being decimated, and we will be doing a lot of imports. That is expected to have to put some pressure on inflation. And if we put the pressure on inflation...
On the exchange rate,
therefore
on inflation.
On the exchange rate, and therefore on the inflation. But the other thing that we have to be mindful of, and you touched on it at the beginning, that level of productivity is not there. So if we're having a spike in inflation with low productivity, we could experience stagflation.
Yes, that's a real danger and a likelihood in the short to medium term.
In the short to medium term, you're quite correct. So it's very important for investors on the call to be able to understand the macro environment, where we're at, inflation, what could possibly happen. We could see a spike in inflation as a result of the actions that the government would need to take to respond to the needs of the country at this point in time.
So as we segue into the investment discussion, here is the way that I think it is helpful to look at that. Jamaica's macroeconomic management over the last dozen years is literally world class.
Yeah.
It has put in place an inflation targeting regime which has created what we referred to earlier, low, stable, predictable inflation. It has managed to increase the Bank of Jamaica's savings, let's call it that, of international reserves, of foreign exchange, to unprecedented levels. And that means that they have the capacity to respond to crises and maintain stability.
Correct.
We have gone from, in the first 50 years after independence, the governments ran fiscal deficits, meaning that their revenue was less than their expenditures for all but 9 years, up until 12 years ago. And Jamaica has had a balanced budget effectively every year since then, except for 1 year in the middle of COVID.
Yeah.
As a result of that, their management of expenditure and revenue, our public debt, the government's public debt, which is really our debt, has come down from a nearly world-leading 145% of GDP, down now close to 60% of GDP, which, even though 60 still sounds high, in the context of managing risk, it really is nothing.
Okay.
So that is and there have been other improvements as well. Investment in infrastructure, really, and a widely recognized excellent management of the macroeconomic framework.
Yeah.
As a result of that, you have created a platform for economic growth, for sustained long-run economic growth. Businesses feel that their environment is less risky. They have a stable policy environment. They have a stable macroeconomic environment. They don't have to worry about capital flight because the government is unable to meet its debts. So what would follow from that? As they say, as economic night follows policy day, is an increase in economic growth. That expectation got interrupted by COVID. It challenged fiscal management, which came through, but that incipient growth would have been put on hold. So COVID was 5 years ago, 4 to 5 years ago. We are starting to look now for the economic growth to manifest itself, and Melissa comes along and creates a massive economic impact. So again, it postpones the economic dividends, and therefore the investment response that we were expecting. But we have a good framework still. We have a solid macroeconomic foundation still. That is what the hurricane has not destroyed. So the country does have the capacity to recover. It's a big recovery, and it's going to take a while. But we have the capacity, and we have a sound macroeconomic framework.
And that's a very important point you made, and I wish to underscore it. And investors need to understand that the macro environment is pretty sound. I mean, if one would say, if you look at the glass half full, we have been impacted by this devastation, but the good thing is that we were doing some things correctly.
And the implication is for long-term investment.
Correct.
This should not make you pessimistic about the future of the Jamaican economy and to say, boy, I should sell my assets and I should start to move out of Jamaica, because the long term still looks good.
It still looks good. Yes, I totally agree with you.
So how you manage your portfolio in the short run may become an issue and a discussion and a reason for you to visit your VM, wealth management advisor. But the long term, that you really should still be, maintaining your investments in Jamaica, still looks as good as it did before Melissa visited us.
I totally agree with you. Persons need to be mindful or be reminded of their reason for investing. What was the objective? And now more than ever, it's an opportune time for investors to be speaking with their wealth advisors to be able to put together structured, tailor-made solutions for them and to ensure that they're able to mitigate that environment. But just to move away from the macro, coming down to the financial sector. And the financial sector in any economy is very important. What are your views as it relates to the sector, the pressure that it may come under? I mean, our sector has been resilient over the years and have improved. It's a sector that is heavily regulated. What are your views as it relates to the impact given this hurricane?
That's a good question, and let me tell you why. You know, the economic statisticians divide the economy mechanically into sectors. So, you know, you have the agricultural sector, and you have the tourism sector, and you have the food and beverage sector, and the financial sector. And that makes them look in some way as equals, but sectors depend on each other.
Yeah.
The food and beverage sector depends on the agricultural sector. And in that regard, the financial sector is the most important sector of the economy.
Yes.
Because every other sector interfaces with one or two other sectors, but every sector of the economy interfaces with the financial sector.
Correct.
Because that is where the surplus goes for the sectors and the businesses that produce surpluses, and they, you know, put it in some kind of savings instrument, and that is where other sectors borrow from and other businesses borrow from. So that is why it's a regulated sector. Because economic management cannot afford for there to be a failure in the financial sector, and we've had that experience. We had a banking crisis in the late 1990s, and it had the predicted effect of disrupting the entire economy. So the question of what does Melissa mean for the financial sector is really more important than what Melissa means for the agricultural sector. When the agricultural sector gets destroyed, it drags down one or two other sectors. When the financial sector gets destroyed, it drags down everybody. We have a good regulatory framework. You know, the lessons of the banking crisis in the late 1990s were well learned. Of course, it's something regulation has to keep up with innovation.
Yeah.
And the fact that the public debt has come down to 6% of GDP means that there's much less worry about a crisis in the government accounts and in fiscal management that's going to bleed into the financial sector. So, no, we can't say definitively that there will be no impact on the financial sector, because I don't know off the top of my head what is the extent of the exposure of banks to loans from the western half of Jamaica. But I would speculate that while the geographical impact of Melissa was nearly half the island, the exposure of the banking sector to the western part of Jamaica is going to be much less than half.
Okay.
Because most of the economic activity takes place, you know, in Greater Kingston.
Yeah.
And so, you know, again, this is speculative because I don't have the exact numbers, but it's not something that, you know, as an economist with an interest in Jamaica, I would be losing sleep over.
Yeah, I totally agree with you. I agree with you. Now, Melissa is a wake-up call, and certainly the way in which you invest, and not just thinking on an individual level, capital markets, institution, government, you have to think about resilient climate type investment. So a lot of you have been hearing about the climate resilient infrastructure funds, green bonds, the catastrophic bond, which we had invested in, good move on the government, and water management and agriculture tech funds. These aren't just buzzwords. Do you see these type of investments coming more on mainstream in the short to medium term as a result of what is happening from a global climate perspective?
Okay, so two things. I'm going to come back to the government's, you know, resilience and insurance stack, which, as you said, it's important that we had it. But let me go to where you started, that Melissa was a wake-up call. It shouldn't have been.
It shouldn't have been.
Jamaica, given its geographical location, has been the victim of tropical storms from before the Tainos were here. So a hurricane should be a surprise to nobody. We know the hurricanes are coming.
Yeah.
We don't know the date of the month, but we know they are coming.
Yeah.
One may come next year, one may come the year after that. We don't know exactly when, but for sure the hurricanes are coming. We also know from climate change that the hurricanes are getting stronger. So that we were going to get hit by a Cat 5. And if you do your little arithmetic, what we got hit by was effectively a Cat 6. It's just that they didn't identify a Cat 6. But the winds were so much greater than the threshold for Cat 5 that if a Cat 6 existed, this would have been it.
Wow.
Okay. But it was inevitable. So that we needed to be actually hit by it for that wake-up call
Right.
really is not justified.
Yeah.
It means that from even before Melissa hit us, but certainly now, one should be anticipating the next hurricane impact of equal devastation from now. And that should inform every decision you make.
Yeah.
It should inform the kind of house and how you build it. It should inform the businesses you go into.
Correct.
You have to take account of this, of this periodic destruction. It should inform the career you choose to go into. It should inform how the government structures its finances. And it should inform your personal investment portfolio.
Yeah.
So you should have been awake.
Yeah. Yeah.
Fortunately, let me get to the second element now. But if this was what woke you up, then think about everything, including your personal portfolio, in the context of, we can have a stable and growing economy, but every few years it's going to get disrupted in this way. Jamaica is fortunate that when this unprecedented hurricane hit Jamaica, it is, first of all, in the fiscal position that it is in now, and not 10 years ago, when it was highly indebted, already running a fiscal deficit, and unable to even service its basic debts at that point. And in addition to that, over the last 5 years, the government has put in place what we didn't have before in terms of fiscally anticipating a disaster. We have sinking funds put aside for disasters in every budget.
Yeah.
We have catastrophe clauses in our government debt.
Correct.
We have catastrophe bonds that pays out automatically, and quite a sophisticated instrument where you don't need adjusters to sit down and make
So it's immediate.
and make a subjective decision. The way it divides the country geographically into zones and then assesses the barometric pressure in each zone and automatically determines if it triggers a payment. We have the explicit insurance from CRIF, the Caribbean Catastrophic Risk Insurance Facility, that also paid out immediately. And, a back of the envelope calculation, and it's only that, that triggered some like $400 million when you add in also the bilateral financial aid we have gotten from helpful governments.
Yeah.
And $400 million US is a chunk of change to help you immediately deal with relief and disaster recovery. However, the extent of the financial cost of this disaster is 10 times that. It's more than 10 times that. So as much as it's a good thing that we had it, we really need much more cover than that. Fiscal cover than that. So going forward, it is really incumbent on the government to take those instruments and scale them up so that we have even more cover for the next hurricane.
Correct. Right. So what it also tells us is that, as you made the point, we should not have waited for Hurricane Melissa for us to be thinking along this route. But given the devastation that Melissa has caused, it has given the government an opportunity, as you said, to do a reform of pretty much all the different, how you go about businesses, housing, how you provide, as you said, in the type of jobs that you're looking. And I really hope that the government is looking at it from not necessarily just putting up a physical structure to get somebody back a roof over their head, but thinking long term about how can we use this opportunity to relocate persons who were in high risk communities, what is the structure of the building, etc.
Okay. An important caution though. The main reason why people live in risky structures in flood-prone areas and have that exposure is because they are poor.
Yeah.
That, globally we're a middle-income country, which practically means more than half of your population are struggling to meet their basic needs, and a part of that is housing. So, a large part of the reason for the extent of the devastation is because people cannot afford stronger, more resilient, less exposed housing. And if the people can't afford it, then the government can't afford it, because the government's revenue comes from taxing the people.
Yeah.
So it is impossible for the government to build safe, robust housing that is not in a flood-prone area for all the people who are vulnerable.
Yeah.
So
someone has to pay.
So somebody has to pay. There's no such thing as a free lunch. So we need to be cautious about our expectation and to be careful about the extent to which we blame the government that people were not better prepared in terms of their own circumstances for this. It doesn't mean there's nothing that the government can do differently, or individuals, but we can't hold them wholly responsible.
Yeah, totally agree with you. So as we segue and looking more at investments and the financial market, the impact of the hurricane on our own financial market, if we were to look at the equities market, the fixed income market, the trading of the FX market, Jamaica financial market, particularly for the equities, tend to have a delayed reaction, not compared to the US market where persons trade on the rumor. So the local equities market has been in a doldrum for some time, although there has been a bit of an improvement compared to 2024. But we have not seen a significant fall off due to Hurricane Melissa. And as I noted, we tend to operate in a herd. And of course, persons might not yet be reacting. There are some specific names that you would have seen some reaction to. As it relates to our fixed income market, rates remain pretty much the same, not a significant spike. We would have touched on inflation, and of course, inflation, interest rate, there is a correlation there, and what that impact may look like for interest rate going forward. Bank of Jamaica held the interest rate.
Yeah.
And for currency, in terms of our local currency, it had pretty much remained within a band. We would have had the intervention of the Bank of Jamaica with its war chest to defend the devaluation or depreciation of the currency. Now, as it relates to putting all of that together, not seeing a significant impact on interest rate, local equities market is not reacting immediately. There, as I noted, there are specific names there. What are your thoughts as it relates to the investment landscape?
All right. Let me tell you my first thought. When you go on to ChatGPT or Gemini to ask it a question, there's fine print at the bottom that says that ChatGPT makes mistakes, so check all answers for accuracy. Okay, since you're taking me out of macroeconomics into financial analysis that applies.
Yeah.
You are right that the Jamaican financial markets don't respond with the kind of alacrity and speed that you're accustomed to in the American markets, because the market is what people call thin.
Yeah.
There are just not that many people trading.
Right.
You know,
There's
trades,
no depth.
and therefore trades don't execute in a millisecond, because when you have a lot of buyers and sellers, when you want to sell, somebody may not want to buy at all, and it takes sometimes hours, sometimes days for trades to be completed. So that is why the market doesn't respond as efficiently. And maybe why we are seeing a kind of a delayed reaction, or not a big reaction, but there might be another reason. It might, and again, this is speculative, it might be because people who are invested in equities and in securities tend to be people who are more knowledgeable about markets.
Correct.
Than, you know, people who have not made that leap.
Yeah.
And so they may be correctly viewing Melissa in the context in which we discussed earlier,
Yeah.
that it is an episodic event and that the fundamentals of the economy have not changed. And so there is no reason to panic
Correct.
about the long-term prospects.
Yes.
So hopefully that's the reason.
Yeah, yeah. I tend to share that view as well, based on the communications in speaking to the different players, whether it's from, especially for institutions who are in it for much longer, the more savvy investors who are saying, I've invested in quality companies that are listed on the stock market, and the immediate impact, or if there is an impact, I'm invested for the long haul. So you're right where that is concerned. And it's very important to make the point to our listeners that in looking at your investment strategy, you have to look at the environment that you're in. You made the point that there's no excess income, or there's no income for you to be going to the movies, to going out. So you're going to be buying the essentials. And the essentials are considered to be your food, etc., which we would dub as the defensive, the staple. So when investors are looking at their portfolio or how they would like to invest in this environment, they need to be looking at companies that are within that in sector. My question to you, Dr. King, is...
Okay, before you go on to that question though, just to add another element to this topic. The thing about financial markets, and in particular the equities market, is that it's forward-looking.
Yes.
It is based on people's expected earnings. Okay, not so much, you know, the physical, the value of the physical stock of the company, although that's relevant. It is how much do I expect this particular company to earn in profits, and therefore in the value of my investment.
Yes.
And because it is forward-looking, the lack of what we see as the absence of a big impact on share prices is telling us that when people look forward, they are not concerned. They're not as concerned as you might expect if it were an event that really affected the long term.
Yes.
And I will remind you of in around 10 years ago, around 9-10 years ago, when Jamaica's stock market led the world in doubling its average share price value. 1 year and then the next year.
2015 and 2018.
That was actually evidence of how forward-looking the market is.
Yes.
Because in those years, that was the beginning of the economic reform and the improved fiscal management.
Yes.
And investors recognized that even though the economy had not started to grow yet, and profits had not started to go up yet, because the economic climate was improving, it shows up first in the stock market.
Yes.
In people's anticipation of future business and economic growth.
Yes, yes.
And so therefore, the failure of stock prices, the absence of stock prices collapsing, saying that I'm not pessimistic about the long run future of business and economic growth.
Yeah, totally agree with you. And as a financial institution, what we do in financial literacy and helping persons to create wealth, whilst you will have that segment that understand and they're not concerned, so they're not panicking, they're not selling, we are saying to investors, you need to look at the fact that the macro environment is very solid. You're looking at these companies that are expected to, there are companies that are expected to positively benefit from this hurricane.
Indeed.
What is the forward looking earnings, and as a result for you to take positions in same. Yeah. So I wanted to ask you, what would you consider to be your opportunistic themes for the next 12 months, 6 to 12 months?
Explain what you mean by opportunistic themes.
What do you see out there in terms of sectors that you think that there's an opportunity there that could consider to seize the opportunity? Of course, there is research that is needed, but just from a high level.
No, so I'm reluctant to do that, and I will tell you why. It goes back to, I'm only an economist. And I don't interrogate particular companies and their annual reports and their financials to the degree that I want to get into the business of picking where the particular investments should go, because the people that work in VM Wealth Management have that expertise.
Yeah, but I'm not telling you
and
to
have
do
the time
that.
to do all of that.
I'm not telling you to do that, but if you look at from your economic angle, do you see construction? Do you see
Well,
from that perspective?
Well-
Certainly not picking the companies.
from the perspective of recognizing that the economy's bones are now strong, and they are probably stronger than they have been since independence. And therefore there's a prospect of long-term economic growth that is greater than the 0.5% and the 1% and the 1.5% that we've all become accustomed to. With that expectation, then a safe strategy is to identify the sectors that tend to do well when the economy's average growth goes up.
Yeah.
Construction is always good for that, because you can't grow without construction.
Correct. Right.
And so anything related to construction would be a relatively safe investment.
Okay.
The
Any other?
The value of real estate in a growing economy, the value of real estate goes up relative to the rate of economic growth. So real estate is not a bad place to be.
Okay.
And of course, the advantage of real estate, if you get into a real estate instrument like real estate investment trusts, then you can only invest to the extent of the money you put in. But if you actually buy property, which comes with a mortgage, then you're automatically leveraged. You automatically get the benefit of a greater value of asset growth than the amount of money you've put in.
Okay.
The disadvantage of actually owning a property versus getting into a real estate investment instrument is that, somebody's going to call you on Saturday night at 10 o'clock and say the plumbing bust. The pipe bust and you have to go find a plumber. So that decides whether you want to own the property yourself or get into an investment instrument where you don't have that experience.
Okay.
But those two, to the extent that you agree that the economy's long-term economic growth prospects are good, then construction, real estate, and the financial sector itself.
Okay.
Because the need for finance increases more than commensurately with a growing economy.
Okay. Thank you for that. Now, I want to pause before I move on the discussion to say to our viewers, if you have any questions, please go ahead, put it in the chat, and we will be taking those questions. So, Dr. King, risk management is key. And what would you consider to be your number one risk management advice for the average investor? Let's keep it at the investor level. What would be their advice in this uncertain time?
Well, I can think of two. First of all, it is arithmetically obvious that a diversified portfolio is less risky than holding one or a very small number of companies. So you do want to diversify, within any asset class. You do want to diversify if you want to minimize your risk, within stocks, within equities, within fixed income instruments, and within real estate.
Okay.
You buy 4 apartments in one new apartment building, and then there ends up being a structural problem at the ground level, and part of it starts to sink, and so does the value of your 4 apartments. But it is even safer to diversify across asset classes. So diversification is one way to minimize risk. Another way to minimize risk is to invest less in new ventures which are necessarily risky, like IPOs.
Okay.
So, but that's the way to minimize risk. When you minimize risk, of course, you also minimize your opportunity for return. So you do want to look at IPOs. If minimizing risk is not your objective, but having the opportunity for good returns, then you want to do the opposite.
Correct.
You want to identify what are the particular companies where you're going to put the focus of your portfolio so that you can get good returns.
Yeah, yeah.
And there are some IPOs coming up soon that you really want to look at.
Yeah, and to just make the point about the IPOs as well, is you want to be looking at the history of this company. So if the company has a history of being profitable, that gives you some sense of comfort. It's not a venture. It's not a new business. So while there is some level of risk from an IPO perspective, you are able to assess the performance of the company prior to.
Yeah, sure. But the point I'm trying to make is that minimizing your risk is not the objective for every investor.
It isn't.
Okay, you need to decide what is your risk appetite, and use your portfolio. Make sure your portfolio reflects that.
Yes.
If you have an appetite for risk, then you're opening yourself to the possibility of greater returns, and you should exercise that.
Yes.
And you can do it in a balanced way. You can say, I'm going to take, and this is an arbitrary percentage, half of my portfolio, make sure that is in a relatively secure and less risky projects and investments. And for the other half of my portfolio, and if you're a young person, then this is a good strategy because you have time to recover. And you're going to take that remaining part of your portfolio and take some risks.
Yes.
And see how it goes.
Yeah, knowing your risk appetite is fundamental. To invest in. It's very important that you do. I do have a question here from YouTube.
I hope it's easier than the questions you've been asking me.
And it states, will the effects of Melissa affect the returns on bonds previously purchased? So you can take a shot and then I'll go.
Yeah. Actually, I think you should take that one.
Okay, I don't mind.
Yeah.
So Dr. King made the point about knowing your risk profile is fundamental. So we want to come from the position that you are cognizant of your risk profile, and as a result, you have made an investment based on that risk profile. There is an inverse relationship as it relates to interest rate and bond prices. Now, it's dependent on the type of bond that you would have purchased. Let me use, for argument's sake, the Government of Jamaica global bonds that we frequently refer to as the Jamon bonds. Having the impact of Melissa, we saw that prices fell off about 2 to 3 points and have since recovered based on that. But I think the fundamental point is, what is the reason why you invested? what was your time horizon? So between the time you invest in this bond and the maturity of this bond or your time horizon, there will be volatilities. If you're confident in the name and it matches your profile, you ought not to be overly concerned about what happens in between. If you're confident in receiving your coupon payments, whether this is quarterly or semi-annually, that's good. If there's an opportunity to invest more into this bond, if it fits within your profile, your risk profile, for you to average down, that's an opportunity there. But once you're able to collect your coupon, you're quite confident. If we use the Government of Jamaica bonds, for example, we're confident, I'm very confident that the government will honor their obligations. A 3-point fall or 2 in between would not be overly concerned. But it's very important for you to have that conversation with your wealth advisor as to the specific investment that you have made.
So we spoke about knowing your own risk profile and explicitly articulating that before you go to build your portfolio. You also need to know your time horizon. Mm-hmm. Are you investing with a 3-year horizon? I mean, some people invest with a 3-month horizon. Some people 3 years, and maybe you're investing with a 30-year horizon. That also determines what kind of assets you get into. Because if you're investing with a 30-year horizon, then you don't want to be checking the app every day or every week to see where the stock price is and getting yourself into a panic.
Yeah.
Because with equities, there's going to be a lot of volatility.
It is.
And the volatility is irrelevant if you have a 30-year horizon or a 10-year horizon. But if you think that you're actually going to need to cash out, even though you may not want to, but if you think you're going to have a need for cash in 3 months' time, then you want to be checking that stock price more regularly, and you want to therefore invest in assets that don't have that volatility, which might direct you to certain kinds of companies for you to take your equity position in, and maybe not equities at all, maybe into fixed income instruments.
Yeah, that is correct. So I have another question. It reads, how long do you think Hurricane Melissa shock will linger in the economy?
You know, that's relatively easy to answer because of the scale of the physical and economic impact. You know, anybody who has, and I suppose everybody has, seeing the videos and pictures of what has happened in the western half of the country will realize that it is going to take not months, but a year or 2 to rebuild that. Mm-hmm. And that is a year or 2 if you have the resources and the capacity to just do it from now and start building. Many persons don't have the income to support rebuilding it, because we said not only is the capital stock knocked down, but the ability to earn is also impacted. So even though in a physical sense, you know, the business can be rebuilt in 5 months or 6 months, you don't have the income to rebuild it. So it's going to take, you know, a few years for that to get back to where it was before.
Okay, thank you for that. And I have another question. So this question is asking, as it relates to the funding from the insurance, the cat bond, and the estimation that the government noted that will for the rebuilding, do you think we have sufficient funding? And if not, if we were to move to the debt to GDP from where it's currently at, will it get back to those unpleasant levels that we had prior to?
Okay, so the scale of this impact was so massive. Estimates have been all over the place.
Yeah.
Because some commentators came out too quickly and wanted to just throw up a number. You know, when a journalist calls you to interview you, you know, they want an answer. And so they're going to bring on people who claim to have answers. And nobody can know the impact, before they do a satellite analysis. So impacts are now coming around to, but not my estimate, what other people have done in relatively sophisticated ways, in the range of 8 to 9 billion US dollars. And the government is going to be responsible for a fair share of that. The government does not have the resources, not even remotely close.
Okay.
So it would not be a surprise to anybody if, as they had to do during COVID, if there was borrowing, and therefore the debt to GDP ratio is going to go up. There are two reasons why that is of little concern. The first one is Jamaica's culture of fiscal management is much better than it was in the decades after independence up to 12 years ago. And that is enshrined in a fiscal responsibility framework which legislatively ties the government to better fiscal management and better debt management. So they don't have the legal room to get back to the horror numbers that we had up until 12 years ago. That's the first point. The second point is, and this is easy to understand intuitively, when you have debt and you have high interest that you have to pay on that debt, then you can get into a debt spiral where, because you're paying high interest on high debt, then it accumulates. Of course, this happened to a lot of companies during our banking crisis in the 1990s.
Yeah.
The situation now is that because Jamaica's debt to GDP ratio is down to almost 60% of GDP, and on a global comparison level, that is low. Jamaica used to be the third most indebted country in the world 12 years ago. We are now down to like the 60th or 70th most indebted country. So that means that international investors have a lot of confidence in Jamaica's ability to manage even more debt than 60% of GDP.
Okay.
So they're not going to be demanding a high interest rate premium to compensate for a risky environment.
Okay.
So that spiraling into higher debt and higher interest cost is unlikely.
Okay.
It's not impossible, because we don't know what's going to happen in the global economy and international interest rates. But at this stage, it's unlikely.
Okay. That's very important for us to absorb.
And it's a reward for the improved fiscal management that Jamaica has done over the last 10 to 12 years.
Yes, that's true. Kudos to the government.
To the
and
government,
the support,
yeah,
the financial
the
sector
governments.
plays a big role in that support as well. So we're at the end of our questions, and I would just use the opportunity before we wrap I see another question coming in. Let me take this one. What is the outlook on capital markets? Is the liquidity expected to be tighter for the 24 months?
Okay, a question for you.
So the capital markets, for capital markets, raising, obviously there is, as a result of Hurricane Melissa, there's going to be need for a lot of, especially small, medium-sized companies would need capital. And as a result, the raise for that is possible. The challenge that you're, however, having is, if it is that interest rates remain elevated, you could have a challenge if it is that you're looking to raise capital, particularly from the equities market, because it tends to discount that company that is looking to raise, whether it's be an IPO or an APO. But the demand is there. I think what it is signaling is that the investment bankers need to be very creative in terms of how they are able to raise this capital. If they choose not to go to the equities market and they go to the fixed income market, you'd have to be mindful of where rates are in the market. Where if the government is looking to come to the market more frequently, you have to be cognizant of that as well. So it is really assessing the environment as we move along, the different variables that you have noted to determine how best to raise the capital. But I do believe there is going to be demand for liquidity in the capital markets. Anything to add, Dr. King?
Sounds good, no?
Nothing
Sounds
to
good.
add.
Well done.
Okay, so it has come to the end of our live session, and I just want to underscore some very important points that was made here today. Jamaica macro environment is solid. Coming into Melissa, we would have made significant strides in our discipline to get us to this environment. And because of that, it helps us to navigate this disaster in a better position. It is important to be mindful of your reason for investing. I can't underscore understanding or knowing your risk appetite is very important because it helps you to navigate the noise, not to be up at nights when you ought to be sleeping. And it also gives you the opportunity to seize opportunities that would present itself, because in whatever environment, it's a trade. What side of the trade are you at? So that's very important. And speaking to your wealth advisor, having that conversation is an opportune time. Any final comments from you, Dr. King?
Just to say that I think this is an important conversation because, you know, in addition to people sort of worried about the human impact that we have seen out west, they're also worried because of uncertainty and just not understanding the consequences of what's going to happen to the economy. Mm-hmm. It's as if they already have one physical impact and there is uncertainty about the economic impact. So it's important to have this conversation so people have a better sense of what is the extent to which they should be concerned and if there are concerns, what to be concerned about. So congratulations on putting this together.
Thank you, and thank you for being a part of it.
Pleasure.
Thank you, our investors or clients who have tuned in. We do appreciate you. Do feel free to reach out to us at VM Wealth to have a conversation about your portfolio, about how is it that you move forward in this uncertain times. Thank you. Good evening.